Good day everyone, Behruz here, worker with Toronto Real Estate Board, and today's video is a long version of stats review for the month of July of 2023 for you. And as always, we have a detailed review of what's been going on and what we are going to see in the near future of the real estate in Toronto GTA. And I'm going to start by saying that the market confidence is back. The confidence, as I've explained in the previous video, is different than the sentiment. Sentiment, we know where the prices are going. However, the confidence is that I am confident in buying a product from you. I'm confident to buy this product because I know this product is of use for me. So the usage of, or the utility value of housing is back, and that is only because we understand that since the start of the interest rate hikes from last year, and exactly July over July, we have appreciated in terms of volume of sales for year over year. For that reason, the confidence is back. However, for the rest of the video, I'm going to explain to you how I understand that what's been happening before COVID started, COVID lockdown started, what's been going on during the COVID, and the impact of that we are seeing today, and what we are seeing, we are going to see in the future in terms of the rental market, in terms of the condo market, in terms of the freehold market, and different regions for as much as I can. I'm going to start by saying that for you who are interested in real estate, you have to look at, currently you have to look at the number of inventories or the month of inventories that are available to us, and also the appreciation from last month, which is significant. And it's over a month of inventory added during the month of July to whatever that's been left with in the month of June. That is significant because that shows that the inventory is starting to build up. However, what's not showing there is that what prices those inventories are priced at. As a matter of fact, if we are built up of inventory of not really affordable, we are not going anywhere in terms of the market sentiment. We are not going anywhere in terms of looking at the end of the correction, bottom of the market, or maybe appreciation of the market is starting to build up. And I want you to understand that these are the few factors where the economy, if the economy stays constant with the same dynamic, with the same interest rates, with the same products that we are seeing from the banks, with the same toughness we have right now since 2017, we have the stress test that's been added to the interest rates that people have to qualify for before they're getting mortgage. Everything else stays constant. We cannot tell you that the market is going to go into a seismic shift if things continue going on. The only thing that's changing, what I'm trying to get at, is the inventory, and inventory of build-up of inventory that are affordable. When is that going to happen? That is going to happen when the central banks are done with their interest rates, based on their understanding that people are now tight to get credit, and for that reason, that spills over people who are basically having to sell their property and moving up, moving down, or moving to another region for certain reasons. And that is the time that you're going to see the supply and demand in a factor, in a sense that is changing the prices naturally to the extent that the market is reflective of. Then we are going to see the price changes. However, with everything stays constant, with the inventory building up to the amount that we are in today, we are going to see more or less zigzag movement into the economy, of the real estate market, and then the price is more or less staying the same as it is today. Another factor is inflation. People are always referring to inflation as they are pricing their homes, and they are wanting to have a better position coming out of a deal or going into a deal every time. It's a conversation between the buyer and seller that determines what the end value of a property is. However, these conversations are very quick, and people are either buying into an anecdote or selling to a story that whether the inflation is going to cause into the prices going up or down. Coming back to the stats, we are now into the economy, into the price range that, again, people need at least $250,000 to afford an average home in Toronto GTA. Based on that amount, we are going to see that the condo market is starting to perform much better than the freehold sector. The reason being that the condo market has always been a entry point, or a point that people can afford. If people are hard in getting finances and are very calculative in terms of what they are seeing, in terms of are very calculative what they are how they're managing their finances on the monthly basis, definitely instead of looking at the freehold, which is way unaffordable, now they're looking at something that's more affordable, and that is condo. In Toronto GTA, we know that we don't have a harmonized disparate or harmonized scatterness or harmonized diversity in different regions. For instance, in Toronto, we have variety of homes: smaller townhomes, bigger townhomes, smaller condos, bigger condos, and 2 or 3 bedroom condos that are very small, 2 or 3 bedroom condos that are big, in any varieties. However, we don't have that in Brampton. We don't have that many in Mississauga. For those reasons, those regions are better to be monitored based on the freehold sector that we have. Now, in Toronto GTA, as I said, the stats are showing that the average is hovering around 1.15. Now, when you're going to Toronto, as I said, because of the variety of homes that we have, that average is staying constant. That doesn't mean that Toronto is not appreciating that much. If you break it down to the detached or a freehold in Toronto, you will see freehold in Toronto is outperforming anything else in terms of price appreciation over a longer period of time. However, what I meant was that based on that price average, which is much higher than the condo sector in Toronto, we do have an average price of condos in July that traded of shy of 680. That is much more affordable than what we are seeing in the freehold sector. In the detached in Toronto, we are looking at 1.6, closer to 1.6 as an average prices as we are going through. But in terms of transaction, month over month, again, we appreciate it in July. And what we are seeing today in Toronto, because of the condo sector, we have much more inventory than any other region. Going back to different regions, as I said, you have to monitor how the inventory is building up and the pace of that, whether it's going down or it's going up. For instance, when you know in Brampton, in a matter of month, the inventory is going from closer to 2 months to closer to 4 months, you know that the fluctuation in prices in Brampton is still too much to call it a correction, to call it the end of the correction, to call it the bottom of the market, whatever you may call it. But what I'm trying to get at is that you have to have a comprehensive understanding of how the market works. As I said, the economy stays the same. The impacts of the interest rates and everything else, stress tests that we have for people to qualify, stays the same. Different regions act differently because you do have proponents of different regions. You do have the popularity of some regions over other regions. Some people don't even like to be in Toronto. For that reason, you have to monitor each neighborhood. Even inside each region, each neighborhood has its own dynamic. For that reason, I'm going to call it the end of this video. Have a wonderful day. Have a wonderful rest of the summer. CNE is around the corner. I hope you enjoy the summer. And if you have any questions which I can have an answer to, please reach out. We are going to have a best understanding of your situation, and we're going to find you the best solution in the market. Have a wonderful day.